Good morning. Good morning. Happy Sunday, everybody. I hope your weather got better. It's sunny, but 12 degrees where I am. So it looks nice, but it's cold as hell outside. We're going to give it just a minute or two longer. A couple people are in the waiting room trying to get their audio connected. And anyone who's just been running a minute late, hope your weekend's going well. Big Super Bowl plans? Rainy on the West Coast, Greg says. Oh, I hear that. I hear that. Hmm. I always like Super Bowls when I have no real skin in the game. Like I just don't care, really. I'm a little rooting. My wife's from the San Francisco-ish area. Grew up rooting for them, so I'm like, yeah, I'll root for them with you. All right, let's get going. Welcome to the Market Watch Group Weekly Market Prep. My name is Scott, and I will be your host. My favorite day. This is the day, like the every other day, the chimp is lurking somewhere. But on Sundays, the chimp is asleep, just crashes all day long. We get to just think about things and consider things and be deliberate about things and objective and logical and all these things that we really wished we could do more when the markets are roaring around us. This is the time to do all that you can do to prepare for the week, to have everything lined up in place and in order, and really increase the probability that we maintain the execution we're supposed to. Love the weekly market prep. Let's get into it. Of course, the disclaimers, as always, education illustrative only. We are not advisors. We do not provide guidance or recommendations, though we will provide alerts with fleshed out potential trade information. It's not guidance. It's not recommendations. It's just simply an alert. Those are coming this week. Very excited for that. We've been working to get it in as good of a place as we can before launching. Of course, we're going to adapt and be willing to improve it as we go based on your feedback. All right, let's get to the agenda. Market posture. Today, of course, we reflect my presumption based on my Friday preview is that our score will stay the same. I said maybe there's a slight chance it goes up. Now, with that being said, of course it could go down, right? I might have missed something. I might have been like, whoa, I didn't expect that. But I would expect us to stay well into the sixes, above 6.5. So I would expect to stay still bullish, and there's nothing that's happened that would convince me otherwise. We'll take a look at the economic calendar. What information do we have coming up? We'll look at some sector searching. Correct me if I'm wrong. I had flagged a sector that we should review. I want to say consumer discretionary because there seemed to be a more than just Amazon resurgence. Does that sound familiar? Someone confirm if that's what it was. If I said a different sector, correct me. But I want to say I thought I said it seemed like we have some strength in discretionary, but we don't really have a depth on our watch list of consumer discretionary. So that's what we'll try to do. We'll do a little sector searching today on consumer. If someone remembers otherwise, let me know. We'll look at our watch list, get rid of anything that is not moving in a tradable manner, add anything that we find from consumer discretionary, put together our early week tradable list. If you ever walked into my office and my desk, you would laugh because I have just dozens of note cards. I love 3x5 cards. I don't know why. My wife's the same way. We both love 3x5 cards. Anyways, I jot down the trading list on it and I just keep it at my desk for the day and then chuck it. But a lot of times they get lost around the floor. So there's just, oh, yes, Paul, thank you. Great, great call out. He said also healthcare. We're light on healthcare that's not pharmaceutical, right? Like that was what we kind of said. Love it. Okay, so I will be ready for developing the short list. The alerts are going to come from the short list. What I'm hoping is that if there's ever been a time where you look at the short list and you're just like, yeah, I see it, but I'm just not confident taking action yet, then hopefully the alerts will kind of show what I'm looking for, what will trigger it, and just give you a little extra something to consider. All right, let's dive in. We've got plenty of work to do. Let's get to that work. Let me get my posture. The Foundations course, version 2.0, has been going well. I hope you've been attending or at least watching the recordings this week. This week, we're talking about routines, which matches section 5 on your trading plan, and a comprehensive look at building a trading plan. Last time it took 2 parts. This time I'm doing it in one. It's going to be information packed. Routines and building a plan. Should be very good. This will wrap up in February, and in March we will start Options Foundations 2.0. Trading Foundations, Trading Foundations got condensed. Options Foundations got expanded. A fresh market log. Fresh market log meaning like a trade log or one of these market postures. This thing hasn't changed in years and years. A trade log, yeah. You can always download another fresh version. Although, if you ever wanted 3 trades, the ability to have 3 trades, I used to have a version of it, but Steven made one. I need to grab that and upload it so you guys can have access to that as well. So, but they are there. You can get at least the basic log in the welcome doc. All right, where are we? We are in February 11th. We are coming into this at a 6.75. We've been pretty bullish. We hit 6 back in December. We really jumped by November. We had a 2-week, 2.5-point jump by November 12th. So November 12th, we were kicking into bullish gear. 2 weeks later, we're in the 4s. 2 weeks later, we're 6. We've been there since. And as you look at, I always reset my platform now because it like stalls out. Never used to do this when it was Ameritrade. But okay, fair enough. And it always resets the size of my lower panels. I really don't need those to be that big. All right. So since November 12th, that's back in here. We said that was enough to convince us. We actually even traded this, not aggressively, maybe a couple of trades. That was when things were coming down. So right in this area is when we really turned the corner. By this point, we had accelerated. We've been bullish this whole time. This whole time. Always just looking for a pullback, buy the dip. Find bull market, buy the dip. So I feel comfortable with where we are, how we see it. Looks great. Market looks great. This picture looks great. Let's talk about what's going on. So Not long ago, we increased our score on the long-term trend. Did we react appropriately? Man, I'll tell you what. I mean, look at that. We increased it right here, and you can see it's really turned up into this area now. Let's just see. If I were to connect these dots, and it almost feels like I could, whoops. It almost feels if I activate that, I can pull this and get all three of these. Okay, now, if I were to, nope, I don't want to draw that. I want to duplicate this and there, something like that. Uh, if we get a pullback at some point, and it may not be, it might grind along here like it did right in this area. It got an extra 2 months right there. Grind along higher, and then maybe sometime in May, selling may go away, then we pull back and have a consolidation. I was looking at a lot of stocks and quite a few have reached record highs. Yeah, blue skies right now. I mean, this a lot of people are like, oh, it's at new highs. Yeah, that means there's no resistance. Right? There's nothing there creating any resistance. I'm going to leave my score, but I'll tell you what, if we move into that trend, that's definitely more of a 1.5 trend. You can see it's still not quite as steep as it was back here in 2021. It was actually even a little better in 2021. 1.5, 1.75. I don't know. So yeah, okay. I feel comfortable with what we did. I'm gonna leave those lines there just for a little while. But the long term clearly has strengthened. So yes, our score going to 1.25 makes sense, and potentially even considering putting something at 1.5. Okay, so what does that tell us? It tells us the institutions look quite strong right now. We've been bullish most of the time since at least back here in March. We had this little bit of a concerning point, right? Little bit of a correction, and that's all it was. It never turned into a trend. Okay, let's go to the short term. Short term, we're at a 2. This current trend right here that I have, I think is reflective of what we're doing for the last little bit. And I would say it's accurate at a 2. I don't think there's any reason to raise or lower my score. I feel good about that. So my short-term total out of a 5-point possible is at a 3.25. Not short-term, total trend. 3.25 out of 5 points. Looks very strong. Looks very strong. Anyone have any counterpoints? Do you agree? Do you disagree? Let me know. Let's go to volume next. What are we looking for in volume? Where's my chart? There it is. Let's go to the 1 month daily. Let's get ready to draw some boxes. You guys are quiet today. Couple of boxes here. Getting closer to where we're like, it's getting stale, right? This week will definitely get stale, but it's still relevant to some extent now. And then we got 3 more boxes here. Everything else is just sort of below average. Now, how do we mark these? Clearly, buying day, buying day, buying day, buying day. And this one is clearly a selling day. We have 4 buying days, 1 selling day. And even as these drop off, is the score going to drop when we lose these back here? Yes, it will drop. Next week, we're going to lose, or we're going to lose one of them. 1, 2, 3, 4, 5. So one of these will drop off. We'll have one of them literally in this like oldest possible position. And then we'll have these two. So I would basically discount it and say 2 to 1. 2 to 1 buyers to sellers, which means the sellers came in, the buyers immediately overwhelmed them. I'm still going to give that a half a point. If there's an above average volume day this week, if it's a selling day, that might take me back to a quarter of a point. But if it's a tie, I'll still slightly give a nod to the sellers. If we get one above average buying day, I'll keep it at a 0.75 for another week, right? 3 to 1. It's sustaining what it needs to hold this current path. That's it for me. It stays this time, and there's a good chance it's going to continue to stay. Not at a half, or not at 0.75, but at least positive at a 0.5. So I'm good with that. So far, no change for me. Nothing changed. Everything is as strong as it was, which is as strong as it has been. Great. We know that February, March, April, very strong cyclically. From a historical standpoint. Let's get to major market. We've had some questions about small caps, the Russell. This is now from April. So this has bullishness, a correction, and then bullishness again. And when you look at what we have here, the NASDAQ is clearly leading, S&P in the middle. The Dow and the NASDAQ are in these lagging positions. The Dow, we expect to be there in bullishness. It tends to sit in a more defensive place. More defensive means people aren't as interested in it. In the same way that we haven't seen interest in consumer staples or utilities, right? Those are defensive, and we haven't really seen any interest in those. Mild interest, below average, below market average, but still bullish for staples. And we had quite a great trade on Costco, some of us last week. Utilities, not at all, right? And so what do we see as we start to shift and change our time frame? We're at 9 months now. We go to 6 months. And what do we have? We have a shift that reflects how the Dow held up in the correction versus how the Russell. They were lockstep when it was more bullishness. But when you isolate and only see this correction, you can see how much more this impacted the Russell than it did anything else. The NASDAQ was second, and in this period of time, it was down about 9.5%. And this is down 16.5%. So that much worse. When we talk about the market adapting expectations, pricing in, this is where it got priced into the small caps. Here's you can see it so clearly. And then it recovered, right? This is the first time. Then it had this recovery back here, October to November, December. That's when the expectations shifted and went from like, oh, remember we talked about it. We like, as soon as the Fed is done raising, everyone's going to be like, well, when are you going to cut? And the expectations just got way overblown. And you could see it getting way overblown as the small caps rallied harder than anybody else. So we just are able to kind of track. It's the small cap story right now. Everybody else is, look at them. They're lockstep. The Dow, the NASDAQ, and the S&P are moving almost lockstep. You can see that right here, in the 133. The NASDAQ's already starting to pull away. It's showing that leadership from technology that is scoring our uh, uh, major market score to at least a 0.5 already, right? When we get to 66, you can see it as well here. There it is in the lead. And then, oh, look, all of a sudden, lo and behold, we were wondering on this pullback, would it be able to stabilize? It hit the 50-day moving average just this week. We said, can it hold? It held and it bounced. Is that enough for me to be like, oh, the small caps are in a leading position, let's make it a 1? No. But it is enough for me to keep my score at a 0.75. Great. Absolutely. They showed enough to say, look, we're still here, we're still trying. When we go down to I don't even need to go to the 22 to help the score. The score is what the score is. But when we go to 22, not a 1 for me. It's got to take a little bit more time. We have to see it a little bit more established. And you can even see here, it's actually slightly lagging still. And that's part of the reason, right? If I had given it a 1, and then I came here and I'm like, wait a second, this thing is the lowest in the last 22 days. That's not a 1 yet. There has to get up on multiple time frames. This needs to be one of them. So it's close though. And we had some good signs of stability, of the small caps finding some sort of a foothold, some sort of a support level that they could try to bounce off of. Expectations have definitely adjusted. We'll go look at our Fed watch and see what they look like, but certainly it doesn't look like the small caps are going to get the benefit of cheap money anytime soon. It's on the horizon, and so that's a little getting priced in, but not anything that's going to blow it out of the water. Okay. Stays the same. Sectors. Obviously, as we start this, communication services, technology, I have to say 50 to 60% of my trading in the last year has been done in those two sectors by far. A lot of money to be made in there, and looks to continue in that fashion for me. Yeah. Those have led us. We since back in April, back here, you can actually see in this April-May time zone, when they were breaking out of the pack. When was this? This was like late April, early May. I'm super curious now. Let's go in our Wayback Machine. That's right around when we started here. And you can see the sector rotation, late April, early May. We started to really see it kick into gear. Yeah, I think we saw it well. Wasn't a strong bull market. It was just emerging. And you can see that's what our score back then would reflect. But I will say this, love those. Those have been the primary two. Below that, we have consumer discretionary has been one that we've liked. Sometimes more than others. Industrials and financials are the other two. And you can see those 5 round out the top from this perspective. There's healthcare. Like Paul said, emerging. Materials not doing much. Energy still not doing much. Staples, iffy. Walmart and Costco are good stocks. I watch them. They're out of that group. So, and then you can see utilities, nothing. There's nothing happening. There's no interest in utilities, no defensiveness that says, well, maybe we should move our money into utilities. That's not happening. Here you can see we've got same thing, communication services, technology, just fighting each other to see who's better. I love that battle. Then you can see here, financials just slightly behind. There's healthcare moving into that spot. Industrials, and then discretionary. Remember, those were the two. We said, oh, those are a little iffy. And then industrials broke out, but discretionary was still kind of below. And now they both have broken. And we're like, okay. I mean, now if you add healthcare to the mix, if you add a 6th, that's, and I still see people are like, well, my concern is it's not very broad because a lot of the gains have come from, Well, yeah, those stocks have done well. I actually brought it up. This is nope. This is year to date. Yeah, but look at this. You can see Nvidia's big. Meta's done well. Eli Lilly's done very well. If we go 6 months, 3 months, that's our bullishness. 3 months since early November. That doesn't look narrow. Am I wrong? Tesla's gotten beat up. Apple's been questionable. Microsoft is good. AVGO's good. All of this is good. All of this is good. This is not narrow over the last 3 months. That looks quite broad to me. Over the last 6 months, I mean, Apple's really been underperforming a lot of these other things. The entire semiconductor, software, and IT sectors or groups have all outperformed Apple. Nothing in the big seven is in financials. And look at the financials, all look fantastic there. So I would say I disagree. When somebody says narrow, I think you really are just parroting somebody else's points about the seven, right? And it's not really a valid point even when things start. The seven have to start us. They're that big for sure. They have to. They're the primer. They're the right. They're going to start us. You're not expecting seven little stocks to pull big everybody else, but those seven can. So when those start, but the momentum is there clearly. Sandy's telling me already that we're a one. This is a one. It's looking pretty good. I'm not gonna. We had some concerns. We'll see what those concerns look like as we dial in this thing here. Okay, what do we have at the 66? We've got 1, 2, 3, 4 above the S&P, including financials, industrials, right? Then we have 2 more slightly below, but in leading positions. I'm inclined to go with Sandy again. She's my sector rotation full score advisor. Last time I followed her guidance and I feel like things went well. Healthcare in the mix. Discretionary charging its way back in. So this upper level here, and you might think, well, these aren't above the S&P. Well, I mean, not all of these can't really get above the S&P. There's not enough for it to be an average. Sandy wants payment. She's like, send the commission it's in the mail. How's the speed for mail these days? It might be a while. Okay. Let's just drop down to 22 and just see. But yeah, I mean that's strong. That is strong. Who's falling out a little? Staples are dropping out a little bit. Discretionary coming back in. Who else? Energy dropping out. Everyone. I'm a 1. That's a 1. Oh, we just might hit that elusive 7 score. Now, here's the thing. We're there for now, unless the VIX disrupts it, and it could. You never know. But that doesn't make us just trade more and more and more and more. It causes us to see things in a certain way, right? I do want to open my risk up, but only to a certain point. It's not like it's that much more, or even will it increase, right? This is just giving us parameters to work off of. The VIX is last. Let's get the VIX going here. VIX. But we need more than that. We need 6 months. Now remember, right here, we went up and we hit this and we turned below. Right here, we raised our score 2-2. Was that last Friday? I believe it was. Yeah. And I believe that caused us to raised, we did. We went from a 1 to 1.25. So do we raise it to 1.5, keep it at 1.25, or does it drop back to a 1? So what happened? On Monday we opened and we are like, what's going on? But then it came back down and then down and then down and then down. And then here we are. What's happening right now? Here's the concern, my concern. That's our last low, basically, right there. Even if you gave like more body weight, it's down here. So that's our last low area. Yeah. And right now where we are is then a higher low. You can see your stochastics are already kind of giving signs. The biggest problem is this. We haven't crossed any of these tops. This body opened at 12.95 and we closed at 12.93. So we didn't even really close above that body. Tomorrow, if tomorrow we go and we have something like this, and you could draw the line, I'll probably put my line right across there, which is above yesterday's high, not above the middle day's high, but above the first day's high. You could do that. You could go there, but basically saying if it crosses that line, what's going on? First of all, it's a negative day. And second of all, it appears to be confirming that is a higher low. And what's the concern? Our concern with any higher low signal that the VIX provides is an escalation. Last time, it never really escalated, which was good, right? It escalated a little bit, but we never really got above 15. You can see back here when we escalated up to 21 in a matter of about a week. We got there. Is it even reasonable to continue lower? It all looks so bullish below 14. Yeah, we can live, back around 12. So that's a great question. Remember this. I'm going to delete this for a second. They're all drawings. I'm going to take this back 5 years daily. Okay, so you can kind of see pre-pandemic in 2000 or in the year 2000. No, the year 99. No, 2019, 1999. Not 2000 or 99. In the year 2020 and 2019. 2019, you can see it lived a good portion between 11 and 14. And when it would spike every now and again to 20, then come back down. Spike up, come back down. Spike up, come back down. So it would spike to about 20, and then it would live down around 14 to 11. So that's where we're looking for this to get back to and go. When you look at what we have here, you don't see spikes. Our concern is when it spikes up to 20. That hasn't happened. I'm certainly and at a certain point, remember that our score is get lower or stay low. Stay low is fine. If it just lives between 11 and 14, beautiful. Those conditions are great for us and help us to see if at any point there becomes an escalation. So let's go back to the 6-month daily. Let's put my lines back up so you can see that what we had. And that's a concern. If that happens, what does that mean for me? I will be more reluctant to put on bullish trades if a signal comes. I will put on a hedge trade, right? SPY put 5% out of the money, 5 weeks out in time. And I will evaluate any remaining trades for exit strategies, meaning do I tighten stops? Do I take profits? What do I do with any remaining trades? So yeah, there's a little bit of a concern here. The score stays the same. If next week we get a higher low, I will drop the score for that higher low. At least a quarter of a point, maybe even a half a point. That might be a quick, like, boom, boom, pull it back a half a point. So we'll see. Okay, so that's it. There's a concern, but nothing that got scored. So my score stays at a 1.25, and there it is. Dun, 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 dun. We get to a 7. Which at the end of the day is really not really much different than it was. In my Paul gave a great question. In my experience, have you ever seen where the outcome of the Super Bowl affected the market short term or long term? No, not in my experience where I've actually like tried to correlate and looked at like what happened after. I will tell you this. February, March, and April tend to be 3 of the strongest months from a cyclical, right? If we just look, I got to find a new cyclical. I can't find that old chart. I don't know what happened to that page, but I'll show it to you guys. But there is statistically a historical surge, February, March, April. So hopefully we see that. All right. What's next? Let's talk about Fed Watch. 84-14. So we're about 5-1. Much the odds of the probability of a rate cut in March is quite small. It looks like now it's better than 1-1, but it's not even 1.5-1 that we get it in May. By June, I would say is a certainty. By May is a probability. By March is unexpected. That's how I would say it. From a calendar standpoint, what do we have coming out this week? Nothing Monday. A lot of inflation data, right? A lot of inflation data. CPI on Tuesday. The Fed's going to be watching that. What are we looking for? This is the big one right here. Year over year is you're expected to see this drop from a 3.4 to a 2.9. That's a big drop. That's a big expected drop. And it's dropping into the 2s. If we get stuck at 2.5, the Fed is going to live with that. Like 2 is the target, but depending on like if you look at like a look at that. Boom. Sandy found it. Seasonality. Let's blow this up. Although this one looks light. Is this so I'll tell you what this does tell us. In a 20-year, this is 20 years ending in 2019. When everyone's like 8 to 10% stock market returns, this averaged 6. It's better than what you got in fixed income, but it's 6 to 8. That's what we're trying to beat, right? If you're doubling what the market's getting, it's worthwhile over time. If you're tripling it, even better still. But that's just something to tell you. Now, what I'm saying is this. You can see we tend to have a bounce in February, and then it pulls back, and then a bounce in March, and then it consolidates, and then a bounce late March, early April, then it consolidates and a bounce in April. 1, 2, 3, 4 potential windows based on what we see here. 4 windows. Yeah. Love it. Thank you, Sandy. Super helpful. CPI, looking for that to drop. Wednesday, nothing. Thursday, a slew of mid-level stuff. Jobless claims, but it's still at 200s. We're not really worried. Empire State Manufacturing got crushed last time, expected to improve, but still be negative. We've got sales. We've got production. We've got utilization. Nothing big expected. Home builder confidence index. And then on Friday, we get PPI, producer price index. So CPI is more demand level inflation. PPI is supply level inflation measures. PPI, we are looking for the core CPI in the 2.5s. So yeah, you can see it's looking good. And we have a little bit of consumer sentiment. So we do have some news coming in. All right. Real quickly, one more thing. Let's run a quick search so we can add it to the list. We said that we are going to. Am I signed into this? I don't remember my login. Nope. Nope. Shit. All right. I'm gonna have to just build it real fast. I don't know what my login is. Okay, what do we want? We want average volume over 2 million shares. I want price. These have all moved on me too. I want price above 10. I want optionable and shortable. Okay. Now, I don't know if you notice, but over here it tells you how many. We had 710. When we started, I believe we were at 8,000-ish. So just, not trading low price stocks because it's for options. If you're doing stock, you might leave that on and not worry about optionable. Over 2 million optionable. I don't care about fundamentals. Technically, what do I want it to be? I want it to be above its 200-day moving average. Now we're down to 461. And I want it to be above its 50-day moving average. And now we're down to 350 stocks. 350 stocks. Now, at this point, I know I'm ready to go into consumer discretionary. Consumer cyclical are the same thing. So we'll go consumer cyclical here. I've got 32. I'm going to go one group at a time. I'm going to go pretty fast here. This is new, and this is the list. Okay, let's see. So nothing in apparel, manufacturer, retail. Now, the next thing I'm going to do, I'm going to go to performance, and I'm going to sort it so that the best performing over the last month. Who's got the momentum? Then I'm going to show it in charts. I could have just clicked the link in my, you have this search built in a link. If you go to the welcome doc, this search is built. This link right here has this search, and you can just click it, and then you can go in and choose the sector and the group. Okay. American Eagle Outfitters, Ross Stores, TJ Maxx. These three all look pretty similar. 4.5 billion. Ross Stores is 50 billion. TJ Maxx. I mean, this one looked great. We just missed a trade right here. Ross Stores, let's put a retail on. We're going to put ROST on our list. I like it because they're all very similar. This one is probably, maybe like a little better, but it's small. It's not going to have as good of options, I wouldn't think. Maybe I'll put it in parentheses above this AEO. Okay, next. Whoops, auto parts, nothing. I skipped auto manufacturers. Ford. Who is this? Stellantis out of the Netherlands. It's kind of choppy. You can see it's an ADR, General Motors. I don't know. What do you guys think? Maybe Ford? Let's put Ford on the list. It broke out. GM crushed their numbers. Yeah, they crushed. It's up high. So on a pullback, either one of those I think would work. I'm going to go Ford. If you go General Motors, tell me if you think that a trade shows up. Auto truck dealerships. CarMax, Carvana. Oh, Carvana like survived. Oh my God. They were like in the depths. And like we have one of their little, machines. They're building machines near us. It was empty for a while, and all of a sudden it's lit back up. But I don't think either of these look all that attractive, personally. Department stores. Nordstrom, Macy's survived as well. Kohl's, I don't know. I just don't see it here either. Nothing here is that enticing to me. Let me know if you disagree. Footwear. On holding, AG. No, not yet. Furnishings, fixtures, and appliances. Nothing in there. Gambling. Sometimes just going through this is enlightening. Oh, DraftKings looks okay. Oh, that can move, and it just broke out. Let's put DraftKings on. I think we've watched DraftKings before. Sometimes it's interesting for you to get better insight into what exactly exists in a sector. When you go through this, it's like, oh, okay, consumer discretionary. Home Depot is better than Lowe's, and Home Depot is already on our list, and we're like not all that impressed with it recently. Amazon's already on our list and looks great, but we're waiting for a trade. VIPS, nothing there. Where were we? Leisure. I'm a man of leisure. Nothing in leisure. Lodging. Oh, no hotels are showing up. Okay, oops, packaging. West Rock, packaging and containers. They were doing good and then have kind of rolled over, both of them, you can see. Right? Let's go to luxury goods. Tapestry Inc. I don't know what that is, but they're showing some cup and handle momentum. Should we, how big are they? 9 billion, maybe? Let's take a look. Sometimes I'll put them on the watch list just to try it on, see how it feels, see how it looks. And then sometimes I take it off pretty quickly. Other times they last. Personal services, nothing. We haven't done this for a while, so this is just good. You can see in 10 minutes, we're going to get the entire sector. Recreational vehicles. Sometimes Winnebago shows up in there. Residential construction, Lennar. Sideways, though, on the home builders right now. Resorts and casinos. Oh, okay. You can see Wynn broke out. Vegas Sands broke out. MGM. I'm going to go with the Sands on this one. They're bigger. I've traded LVS before. Las Vegas Sands. Okay. So that's a few new candidates for us. Let's see if there's anything else. Resorts, or excuse me, restaurants. Cava Group. I don't know what restaurants they have. I mean, they're moving. That's a maybe. Cava Group. 6 billion. I wouldn't expect that they have great options. Specialty retailers, Best Buy, Bath and Body Works. And I remember when I thought Best Buy was going to not survive, right when Walmart first started carrying TVs, there used to be like all these electronic stores that went out of business. You guys remember those? Ultimate Electronics, remember that? Travel services. TripAdvisor, Trip.com. Airbnb looks real sideways. I'm going to leave it as is. We got 5 new ones. Not bad. 5 new ones. I'm going to add those to the watch list now so that they get looked at with everything else. And then anything we don't like, we're going to get rid of as we clean this thing out. EKNG, TPR, and I'll update the group's watch list today. Got it. All right, let's get to the watch list. Are we keeping to our agenda? What did we say we were going to do today? Market posture, did it. Economic calendar, did it. Week ahead, did it. Watch list, got it. We're doing pretty good today, you guys. We're keeping the schedule. It's now 18 degrees here, so it's warming up. I'm going to definitely have to take the dog for a walk. So hopefully it gets a little better still. Apple. I'm here for Apple. Yeah, look at that, right? It's enough. If it doesn't drop back below 185 on this consolidation that it looks like it's kind of going into, yeah, absolutely. AIG, I would say AIG is still viable. It gave a false start. You might have even took it and took a small loss, but it's still bouncing or looking to hold the 50. Ooh, actually, I don't know. Scratch that. It's earnings. You only have a couple of days. I'm going to say no for that one. AMD on the list. On the list, and I think you could have considered that viable on Friday. It gave a signal, boom, it failed, but it didn't go wrong. It held. So a false start, looking like it may be trying to go again. That's viable. Amazon. Oh, Amazon just sort of busted right out of it. Was like, is this a flag? Is that what this is? It just sort of went sideways and then boom. It's hard to say that's tradable now. Possibly for a continuation. I'm going to put it on the list, but that's really more of a continuation type setup. AXP, nothing there. Boeing, nothing there. BK on the list. And certainly a contender for an alert. BLDR, overextended. BX gave a signal. And this is one that you might have taken back here or here, and they're still in, carrying through the weekend. City, definitely a strong alert contender and looking good. Caterpillar on the list, pulling back. Strength in industrials. You can see industrials and financials sometimes has a tendency to like move together a little bit. Capital One on the list. A lot of confirmation that financials is showing the signals right now. Nothing in oil. Looking overextended in Costco. Anyone still in this? I closed the rest of mine. Definitely still in this. Carried some. Closed some, carried some. Okay. CSX on the list. Industrials starting to pull back. You can see it from Caterpillar. You can see it from CSX. Looks good. It's pulling back. Great. DAL, I don't see it. DHI, that's a maybe. That's our home builder that we have. DraftKings overextended. Ford, just got to a new high. It's starting to ease back. Put it on the list. Looking for a flag type consolidation. Fastenal. I'd say Fastenal is a possibility. Looks like it gave a false start, pulled back, holding, starting to turn again. GE overextended, nothing there. Gold, sideways. Google is back in favor after its gap. At this point, the buyers have clearly done enough. Clearly done enough. Now just looking for a pullback. Home Depot. Maybe it's got earnings. I don't know. This sort of worked. I don't know. I didn't like it. IBM is a definite. IBM was tradable. I believe at least some of you and me took it on Friday. Yes, anybody take IBM? Very tradable. Intel, Harry said yes. IWM, okay. Look at those small caps trying to bust that recent high. Okay, small caps, do your thing. Press got it as well. Well done. JP Morgan, I like Citi and the credits better, personally. We may do a new financial search soon to make sure we have everything we like there. Got out. Oh, in and out on Friday. Okay, fair enough. The Sands looks good, but we're waiting for a pullback. Meta, I think we're still looking for. It's overbought and looking for a pullback. Nothing there for us, unfortunately. Netflix, that's maybe. That's a possibility. Looks like the sellers couldn't do much with it and the buyers are starting to come back in. Nvidia is just a beast of a stock. Just parabolic. It's hard now because you start thinking, man, if this thing gets some profit taking, it can give it back. Picard, that was one. Industrials. How do you know when to get in when the trade looks sideways? Give me an example of a stock that you're thinking about, and we'll talk about it. The last one, Nvidia or Netflix? This one, Netflix. Okay, so my thought with Netflix, when you say it looks sideways, we're basically saying from this point right here, because up until that it was crushing, right? And realistically, you'd actually kind of say this thing has been sideways to a little down. And you'll notice when you come down here, it matches up precisely with your stochastics, right? It ended there. And this right here now is what we would then be representative of the seller's cycle, right? That's, I keep like messing myself up, but that's representative of the sellers right there. What did the sellers do during this period of time that we are associating with them? Not much. Couple percent. Not much. What are we looking for? We're looking for this to cross, and it looks like it's starting to, and a nice candle. That candle's the only missing piece on Friday, right? I would rather have a candle that looks like this that says, there's the buyers, than, oh, the buyers started, but they didn't hold on, but by a little bit. So right now, the final piece is up here is where we're kind of saying, do we have what we need for the buyers to be convincing us that they're coming in? The sideways part, easily explainable as representative of the what the sellers accomplished, which is minimal. And now we're just saying, as soon as we're convinced the buyers are coming back in, we're looking to go. Hopefully that helps. It's just a matter of over here. Okay, good. Where were we? Ross, new, a little overextended. SMCI is doing its best impression of NVDA. It's a freight train right now. There's the SPY, looks good. Lots of lines drawn. TPR overextended, maybe starting to pull back. Let's put it on the list. Anything that starts dipping, we start getting interested. Find a bull market, buy the dip. UNP. So what do we see? Maybe some industrial, maybe some financial, a titch of technology. Yeah? Financial, industrial, a titch of technology. That's what we seem to have going on. Waste management, where's that? That's industrial. Boom, add it to the list. Walmart, overextended. XBI, sideways mostly. We did not look through healthcare. Let's go see it real fast. I still can't toggle. Materials sideways, communication services bullish. Energy iffy, financials bullish. Industrials bullish, technology bullish. Staples mostly bullish, like stable bullish. It's not strikingly bullish, but it looks pretty good. Utilities, nothing. It's down. Healthcare bullish. Consumer discretionary breaking out again. How can someone make an argument that there's not a broad-based rally going on, right? It's across 6 sectors now. Come on, what do you want? We can see it clearly on our heat map. Okay. We have, what's my take? I'll take a look at those. Roku Communication Services. I'm probably going to like it. It just kind of you can see what's happened here. Communication services, it consolidate. There's that line. Find that line always when something's consolidating. And it broke that line, and it got up, and then it pulled back, and that's the first higher low right there coming out of that consolidation. So I like it, and it's made a higher high already, but it's got earnings coming up. So I don't know. Be careful with what you're going to do with that one. CRSP, is that a pharmaceuticals, therapeutics, biotech? I mean, same kind of a thing. It's really breaking its consolidation for the first time right now, which is good, right? So it pulled back, and it just sort of had this, there's that line of consolidation. Hasn't done anything coming out of this until now. Boom, it busted. Little bit of volume coming here. But I don't want to trade it till I get that pullback. And the problem is I've got earnings here as well. Zoop. Well, no, not that soon. That's a crooked line. That's a crooked line. Path. Another pharmaceuticals or biotech. Bam, it got up. It's at the old high. I don't know. That one, that was viable right here because the same thing. What happened? It broke. It got up in here and it pulled back, and there's your higher low. That's the signal right there. By that day, I think you could have had this trade. That's where we want it. Bouncing off that higher low out of that dip before the acceleration comes. Okay, real quickly, trading plan. Path is AI. Okay. I think there's better AIs out there. We should reevaluate AI. It was funny because during like the COVID, we would have like a pandemic watch where we would look at all the companies developing vaccines. Now I want an AI watch where we're constantly making sure we've got the best candidates of that. Let's take a quick peek at the trading plan. We are now on to analytics. You should have your record keeping habits structured. You should have at least 25 trades, and you should have these analytics. The analytics are done for you. Remember, trade log is where your record keeping, dashboard is where your analytics are. This is all automated. This is, and again, we have a few ideas that we're trying to work into the schedule for a workshop, a trade log, a full trading plan workshop, a trade log workshop, and the experiment. Those are three very exciting things that we have on being developed. The first priority, though, is the alerts. So this is done for you. You don't have to do anything. You just have to come in here and evaluate it and develop a cadence for how often and how frequently you're going to look at your numbers. That's what's beautiful about this record keeping system. Lastly, we're 5 minutes over. If you need to bounce, I get it. Let's just take one quick peek at healthcare. We're not going to go group by group. I'm going to let you do that on your own. There's 34 of these. Are there some good looking things? Yes. Yeah, I think you could find some stuff. So let's do this. Your assignment is to find me 3 good healthcare stocks and bring it with you tomorrow. Tomorrow morning, whoever brings 3 healthcare stocks gets a gold star. Gold star. I mean, can you imagine? All right, listen, everybody, have a great rest of your day. I'm going to send 2 emails today. I'm going to send my the recap, and then I'm going to send one more reminder for Discord to get on there. I might, because I'm generous, send an email and a Discord alert for the first few alerts, but it's just cumbersome. I'm going to only use one medium, so it's going to be Discord. Make sure you're signed up. Have a wonderful rest of your day. And as always, happy trading.